Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP and 10 million jobs. And we do this out of Silicon Valley, but with a global footprint. Our team is completely virtual and spread out around the world. And the entrepreneurs we work with are all over the world. You will see lots of people are coming from very different places in different parts of the world today. All right, so this is our 341st session of free mentoring roundtables. So it's been going on since the fall of 2008. We started kind of experimenting with it, and then obviously, if you can do 341 episodes of something, something must be working. So we have hit upon a model of collaboration around the world that is very simple at some level, but also gives us an opportunity to work together. This is a working session. We are here to work with you, and it's been a very productive way of taking what we have learned in Silicon Valley and elsewhere and bringing it all together in some sort of a best practices platform. This event is being recorded. You will find this and all other prior sessions recordings on our YouTube channel as well as on our blog. If you're following us on Twitter, please, you probably know at 1M by 1M and at Sramana are our handles. We publish a lot of, intense content, learning materials and inspirational material on those two channels. And if you're live tweeting the show today, our hashtag is 1M1M, so please use that hashtag. The YouTube channel is 1M1M Roundtables. If you go there, you'll find recordings of all our prior sessions. And these are the call-in instructions. So if you are going to want to call in to chat about something, to discuss something that is on your mind, something that you might be working with, and so forth, please, by all means, plan on calling in. This is a roundtable. It's not a broadcast. So we want lots of participation. My intent today is to begin with Sergio Furio from Brazil. Sergio, are you on the call?
Yes, I'm here.
Perfect. Well, Sergio is the founder and CEO of Creditas. This name, Creditas, is new. I think it's only been a few weeks that this name has come about. You may have read my story on Sergio's company under the company name Bank Fácil. So, Sergio, tell us about Bank Fácil, which you're now calling Creditas. What do you do?
Yes, so first of all, thank you very much for the opportunity of sharing our story. So basically, the Creditas is a digital lending platform. We focus on secured loans, so that means basically home equity loans and auto equity loans. Our mission is to reduce the huge interest rates that Brazilians are paying to the traditional players by disrupting the market through technology and the usage of this innovative product in this country.
So this is not where you started. Tell us a bit about where you started and how what did you learn from the market? What caused you to pivot out of your original hypothesis to this one? Take us a bit through your journey.
Yeah, so the story is, well, basically originally I'm Spanish. I moved to New York in 2008, spent like 4 or 5 years in New York, working in strategy consulting for retail banks. By 2011, I was already sick of it, if you want, and I was looking for opportunities in the FinTech space. I got to know the Brazilian specific problem, which basically is a huge banking spread between what investors get paid for the money and what borrowers pay for the debt. So basically, in the U.S., they would have like a borrower borrowing money for like 10% or something, and then investors getting a 1% for the money. That's like a 9% spread, if you want, or a personal loan or something. In Brazil, basically, investors get paid a 5% and borrowers pay a 200%. So the original idea was there needs to be like a better way of managing this process of the acquisition process of new customers. There's definitely like an issue with financial education. So the original idea was to create sort of like a bank rate type of model or money supermarket, sort of like a lead generation company, delivering education to the common Brazilian. And then, with a lot of emphasis on organic traffic and the like, and then taking those potential leads and directing them to the banking industry. So what we realized very quickly, and actually, it may take us it probably took us 9 months or something, was that in reality, the problem was not in acquiring customers. The problem was more on actually converting customers. It was not on the marketing component of the session. It was more on the processing and on the efficiency of the conversion funnel. So what we did was we completely changed the approach of our business from being a horizontal marketing model to being like a totally verticalized lending platform and focusing on the very, the very biggest problem that you may have, which is, reducing those spreads and making sure that Brazilians were paying a lower rate. So we started at the beginning by partnering with traditional players, and instead of just generating the lead, processing the loan and actually doing the underwriting process of the loan, but then having them taking the risk and so on. And then progressively, we start moving more and more through the value chain until today, in which we issue our own funds, we fundraise money that we put into the platform, to the processing of the loans, to the collection of the loan, and so on. So we started by partnering with the banks, and we ended up being a partner and at the same time and a competitor as well, right? So actually, since you mentioned it before, I was going to say, since you mentioned it before, so the reason for changing the name from Bank Fácil to Creditas was that originally the idea of Bank Fácil was to have a better way of interacting with the banks, right? Like an easy way of interacting with the bank. And now we have nothing to do with that. We are like a credit company, and that's why we moved into Creditas.
Now, there was a core insight that you had in coming up with your, strategy, which is around home ownership in Brazil and using home equity as collaterals, yes?
Yeah.
Could you talk about that?
Yeah, definitely. So just for context of the audience, so Brazil is it has $500 billion in lending to individuals, $500 billion. That compares to the U.S. where you have 13 trillion or something, right? So relatively small compared to the U.S. in terms of amount of credit for the individuals, but at the same time, the spread, the margin was astonishingly high. So on average, the margin for this lending is at 40%, 40 spread. That's what I'm saying. Compared to the U.S., where probably you have something like a 2 or 3%, no more than that, right? So even though you have a 10 times less credit, you have 10 times more margin. So in reality, the size of the revenue pool is pretty much the same as the one that you could have in a huge economy like in the US. So what actually happened was that we started looking at why was it that consumers were paying so high, and what we realized was that they were basically focusing on unsecured loans. So they were taking money in a very short term and very high interest rates. So that was overdrafts, revolving credit cards, personal loans, priced at above 200%. We dig a little bit deeper and looked at those customers, and what we realized was that they were like homeowners and car owners. And the thing was that when we were going deeper and deeper, we saw that 70% of the residences in Brazil have no debt whatsoever, and so no mortgage, and 70% or 75% of the car fleet has no debt either. So there's not like an auto loan. And the rationale behind this was that 10 years ago, you didn't have long-term capital markets. So from a banking perspective, it didn't make sense to move into lending for the long term, right? So what we did was say, okay, so this looks like promising. We launched in the market the first digital platform that was focusing on using those residences and those cars as a collateral for a much cheaper lending product. So basically we just focused on that thing now.
Yep. Now, you managed to bootstrap this company for some distance such that you could attract some seed capital. Talk to us about that very early stage of business building and validation. What were you able to do to be able to attract some amount of seed capital?
So in the early days, it was like a pretty crazy thing. So I was like a strategy consultant by myself, and definitely the last thing that I did was like thinking about the strategy too much. I just like jumped into execution very quickly. So the business model, as we were saying before, it was like not robust at all. So I spent like originally I was expected to spend like 12 months for the first fundraising. It ended up being like 18 months for the first fundraising. So I was like running out of money, sold my apartment in New York just to make sure that I had like some cash just in case of. But what we realized was that the investors didn't like the model because the conversion funnel in Latin America in general, and probably in most of the emerging markets, is so unattractive. So the efficiency of a lead, from lead to closing, is so low compared to more developed markets that the value of the lead doesn't pay off, right? So ultimately what was going on there, and the reason why we were not able to attract investors in the early days, was that we didn't have a model. It didn't make sense. So the secret sauce was let's find an actual problem that we can solve end-to-end with attractive unit economics. And from that perspective, verticalization was a must. So once we identified the problem, it was all about putting together the unit economics of our type of business, going to the investors, and then automatically was much easier than before. So I guess that the takeaway from that is fundraising in emerging markets, at least in Latin America, much more difficult if you don't have like a clear case on your business model, then dramatically more simple when actually the business kicks in and you have like some nice metric to show. So basically our funding story was we were founded in April 2012. The seed capital came in October 13. Then we did a Series A between 15 and 16 that was in total $7.5 million. And then we just closed last week our Series B that were $19 million. And that was just like a week ago.
So let's talk about the period between your seed and Series A. So 2013 you closed your seed, and in 15 you said you closed your Series A?
Yeah, that's it. So that was basically 18 months. Yeah. 18
months. And what were the milestones of those 18 months? What did you accomplish in those 18 months?
Yeah, so we started, when we raised the seed capital, basically we were still in the lead generation business. We didn't have a platform that was able to actually process the loans. We just had like a platform to generate leads. We had like a good traffic in October 13. We had like a good traction, but no lending platform. So the milestone that we actually worked like crazy to attain during 2014, that was basically the whole effort and the whole investment of the seed, was to actually create a platform that was able to process the loans. It didn't have to do the underwriting, because the underwriting just came in 2015 and 16, but the processing of the loan was the critical milestone. So by a year after the seed capital, we already had the processing workflow, and the metrics were pretty good. So we just with a couple of pages, we just went and started pitching to probably like a group of 10 investors, no more than that, and in a month we got the term sheet. So I would say that the milestone was building the processing platform. And proving that the metrics were already paying off at that point.
So when you raised the seed money, did you tell your investors that you were going to move in the direction of actually processing loans?
Yeah, that's a good question. So I would say that, you know, from a history perspective, in the early days, we were trying to shoot for the moon. So we were trying to do everything at the same time. So we wanted to go vertical and horizontal at the same time, right? So we wanted to still like remain multi-product, doing not just credit, but also credit cards and even insurance and even like flirting with investments and so on. And at the same time, we were also telling the seed investors that, you know, we had like the opportunity to do a verticalization. So I think that, you know, looking backwards, it was like a very naive approach that you can do with, you know, with just $1 million that you can do like the entire thing. It definitely didn't happen. So we told them that we were going to build a processing platform, but we told them that we were going to build like 10 more things. And thanks God, we ended up just focusing on processing. And then when we reached the seed, then everything was clear at that point.
So, you know, one thing that strikes me, Sergio, is the problem with the emerging markets, especially where things are or where things have been in the last, you know, 5-7 years, is that the market is not only full of first-time entrepreneurs, it's also full of very naive investors. You know, somebody who has seen a few cycles on the investment side would have probably been able to guide you better and tell you that you shouldn't be doing all these different things. Just choose one thing and do that one thing. $1 million is a little bit of money. It's not that much money to do that many things.
Yeah, so I had like a slightly different perspective that I would like to share with you. So in reality, that everyone was advising us not to do that thing, but we just thought that we were like smarter than them. So in reality, I think that
you were not listening.
Yeah, exactly. So I would say, you know, like a self-criticism, I was like simplifying the whole reality and saying, no, obviously we're going to be able to do this entire thing. I mean, it's just like tweaking a couple of things here and there. So definitely I wasn't one that was being naive more than the investors at that point. I think that, you know, in reality, I think that in Brazil, I would say that the biggest difference between a seed investor in Brazil and a seed investor in developed markets is the seed investor in Brazil, they like to see some revenue, they like to see some good unit economics. They are not willing to take the risk of you know, the product market fit type of thing, and you know, maybe this thing never generates a dollar in revenue and so on. So I think that's the biggest difference.
But you know, this is true nowadays. Nowadays in the U.S. also, that is true. In Europe, it is true. And primarily it is true these days because a lot of companies are bootstrapping to a certain level of validation. So the seed investors have the option of investing in validated companies versus not validated companies. And as an investor, you know, you would always go with stuff that are less risky and more validated. That's just how the market operates.
Yeah, I guess so. That was like 4 years ago. Probably in the U.S. it was like much easier to raise funds at that point. But you know, if I think in retrospective, I think I was not ready yet. That was the reality. I was like a first-time entrepreneur with a not very clear vision on where the business were heading to, not a very clear view on the business model. So I got like so many no's for like 9 months or something that you know, thanks God that in 14 we just focused on what actually mattered, which was like creating the business. Yeah.
Now, in between Series A and this round, which is, I imagine, your Series B, right? The 19.5 million is Series B. What were the levers that really helped you get, you know, much further in the business?
Yeah, so obviously traction needs to be into the equation. So definitely we were growing fast for our type of business. So as a reminder, secured lending tends to be like a much less scalable business because of the complexity of the processes, the appraisals, you know, the formalization and so on. But we were growing like we were tripling on a year-on-year basis, and we were even more than that on a revenue basis. So definitely traction was like a relevant factor, but more important than that, we finalized the verticalization process. When we reached the Series A, we had like a platform for doing the processing of the loan. When we had reached Series B, we had like a full platform that was not only doing the underwriting of the loan and the formalization of the loan, but it was also doing servicing, and we were actually even creating our own vehicles to do the investment and connecting directly to investors instead of going through financial institutions, right? I think that the degree of freedom that we have today compared to what we had in Series A was an order of magnitude bigger, just because we are sort of like owners of our destiny. So I believe that the investor looks at a company that can grow by itself regardless of what happens in the economy, especially in this in the current scenario in Brazil with the economy in a 3-year recession. So I think that's like a critical point in which it adds tons of validation, both to have like traction and at the same time a control on the entire value chain.
Now, when you raised Series A, you said it was a very fast process. You only talked to about 10 investors in Brazil, and you were able to close the deal in 1 month. Talk to us a little bit about the scenario in, the venture capital scenario in Brazil. What are the key trends and learnings that you can share?
Yeah, so the situation in Brazil has changed dramatically in the last, since we started until now. So 4 years ago, Series A was not, the market for Series A probably was not that liquid, and for seed, it was like a mess. It really, there weren't like a seed funds or an ecosystem for angel investing and so on. Even the entrepreneurial ecosystem has dramatically improved. So if I look at today the startup ecosystem, so you have a bunch of accelerator programs. You have tens of angel investing groups. I actually I'm the board member of the HBS Angel Investors here in Brazil. It's a group of like very active 60 to 70 investors and so on. So for seed money is a great time to be in the country. There's like quite a lot of liquidity, and that piece, there's like a bunch of people that is willing to put on like let's say like a $250,000 check, $500,000 check to kick off your business. On Series A, you have basically probably like a group of between 5 and 10 funds that are focused on that specific segment. I would say that there are like 3 specifically that are like the market references. One is local, which is Monashis. They have been around for like probably like a decade or so, and there are like there are another 2 that are international. One is a Redpoint Venture, which is a joint venture between 2 Silicon Valley funds, Redpoint Ventures and eVentures. So they created a $130 million fund back in 2012 or 13 or something, and they are one of the 3 references again. And then the third one is Kasek Ventures, which is from the founders of Mercado Libre, one of the most successful cases in Latin America, I would say. So those 3 guys are, typically writing checks between, $2 and $5 million for Series A's, which is like the typical Series A in Brazil. And then you have like another, as I was saying, 6, 7, maybe even 10 additional funds that act either as leaders of slightly smaller rounds or as a participant in a $4 to $5 million Series A, right? So for Series A, I think that liquidity is pretty good these days. Good business gets funded as always. Bad business, they may have like some difficulties as probably as always.
As they should.
Right? As they should, exactly, as they should. So that's for Series A. We are seeing some international, like pure international investors also looking at Series A. And an example of that is Sequoia. They made the first investment in the region in 2013 with Nubank, which now is like the success story in Brazil. It's almost like it's getting to a unicorn right now in dollar terms. and they made like that first investment in 2013, and you have like you know, those international funds are mostly like focused on Series B. So if I look at Series B, then local money is pretty scarce at that point, right? So a Series B in Brazil would be like a $15 million or something, even like you know, probably something between 10 and $25 million. That would be like a Series B in Brazil. Our Series B was $19 million, as we were saying before. And typically the leaders of those rounds tend to be funds that have no physical presence in the country, but that they know the country for a while, and then they make like selective investments. So in our case, we invited IFC, which is from the World Bank, so the International Finance Corporation, which has like a branch that invests in FinTech for the last years. And they are typically leaders in the country and in Latin America in general for this type of Series B rounds. We also attracted Naspers FinTech, is the new fund from the South African conglomerate. They are also targeting rounds of this size, like $15 to $20 million. And then we also got the participation from the current investors, which are, you know, Redpoint, Kasek Ventures, as we were mentioning, Quona Capital, which is a fund based in DC from Action, and then QED Investors, which is from Nigel Morris, and they are like you know, great investors in FinTech, in companies in the US like SoFi, Prosper, Credit Karma, and GreenSky, and so on, right? So I would say, you know, Series B is the point in which you really need an international venture capital or fund that is going to be leading that round, and the local money probably at that point is not getting in anymore. When you pass that point, you can you probably would need to do something like what Nubank did last year, which was like attracting funds like a Founders Fund from Peter Thiel and the like, or you should probably rely on the private equity, on the local private equity ecosystem, which in that case, private equity is like a good option for tickets, you know, above $50 million or something. But it obviously depends on the cash flow generation capacity of the business that you reach at that point.
Well, one of the funds that you have chosen to go with does have that, you know, history of working kind of in this bridge between venture capital and private equity. Naspers does private equity style deals as well.
Yeah, I would say that they are like, in reality, they are like a venture arm of a corporation in reality. So that's what typically Naspers does. So they typically go for they try to get control of the company and then operate the company itself, right? But what we did was not Naspers directly. It was Naspers FinTech, which is a specific fund that they aim to do VC investing. So they target, like, you know, minority stakes similar to the VC type of style. So they want to be close to the ecosystem. They believe that there's like a long-term trend of migration in financial services, and they have like selected 2-3 verticals that are very relevant for them, that are part of their vision for the long term. But they operate as a VC in this type of business, so they don't actually get into the direct management of the company.
And what about exits? So, of course, the regional exits the biggest one has been Mercado Libre. You've had Globant and just a couple of others, real, you know, exits, and most of them have been exits in the New York Stock Exchange. What is the thinking currently in terms of exits, and is there a Brazilian exit option?
Good. So that's a good question. So the Brazilian ecosystem for startups and technology-driven companies is relatively new. So it started probably, I would say, there are waves, right? But you know, I would say that the first wave was companies that were founded in the late 90s, and the best example of a successful case is Buscapé, which is like a price comparison e-commerce type of thing. It was sold actually to Naspers in reality for $350 million, like 6-7 years ago. So that was like a success story, and the founder of that company became a reference for the ecosystem. And actually, he's now a partner at Redpoint here in Brazil. Then the second wave was e-commerce, and that was in 2008, 9, 10. That was the moment in which that type of companies were founded. Those cases were not didn't experience like great news in terms of exit. So there were not too many exits in that space. So that was probably like a going backwards type of thing. Investors realized that the market had like some complexities, and there were actually not like a lot of buyers looking to buy those type of properties, with certain exceptions. Ultimately, I would say. But looking more recently, what we saw was a set of companies that were created specifically in the financial services industry. One of them is Moip, M-O-I-P. It's it's a payments gateway. It was sold recently for $100 million. We have like another success story, Zero Paper, which is a SaaS model for small businesses. It was sold to Intuit 2 years ago. And then you have companies that are getting into a size that they are like rethinking about the IPO. I'm thinking about like a couple of them. One is XP Investimentos. It's sort of like a technology company focused in, it will be like the Charles Schwab of Brazil. And so they are targeting an IPO that is probably going to value the company at $3 to $4 billion. And the other one is Netshoes, which is an e-commerce for sportswear. And probably they will be like looking for an IPO in 2017. So it obviously depends on the market, but I think that those type of exits are going to be great news for the ecosystem, and it's going to be the confirmation of an investment trend.
Those last two, do you think they're going to seek exits at the New York Stock Exchange as well, or are they going to look for exits in the Brazilian stock exchange?
So that's a good question. I would say probably the type of company that Netshoes is would look at international markets, I guess, versus XP, that it may be like a combination because of the size and the interest on local investors. Actually, XP is already an exit because it's General Atlantic bought like a 49% stake in the company, right? So it already had like some liquidity for certain of the founders. So it's already like a successful case.
Yeah. And if you were to make that decision, whenever that decision is going to cross your path, are you going to choose to exit in Brazil or in the New York Stock Exchange?
So we are not thinking currently on the IPO of the company. I think that we have like a 2 or 3 years of exponential growth that is ahead of us, and this fundraising is going to be enough to actually put the company where we want to, and I think that's like a discussion for the future. I think it certainly depends on the market conditions in the moment in which you want to do the exit transaction, right?
Very good, very interesting, very enlightening, and it's great to see success stories coming out of Latin America and in particular, in your case, Brazil. Sergio, are you staying for the mentoring piece of the session?
I will be staying for a bit here, yes.
Okay, great, excellent. All right, folks, we're going to switch now to the mentoring portion of the presentation today. We have 3 entrepreneurs who are going to be presenting. Let me set a little bit of expectations. This is a working session, guys. We're going to work together to see what strategic insights we can help you with. We're going to discuss your strategies and put our heads together and just discuss how we might be able to accelerate your business, how you might be able to accelerate your business, and we'll just give you some input. And there is absolutely no other agenda. This is a completely safe place. We are on your side. That's the most important thing that you should take away, is that, whatever it is, the only agenda, we're not on investors' side, we're not on somebody else's side, we are on your side. Now, one thing you need to keep in mind is not all businesses can raise money, not all businesses should raise money, and raising money does not guarantee success. If you follow our blog, we have been doing these death by overfunding stories to highlight this issue. we've seen company after company going out of business by, with the wrong financing strategy. Markets have been wild. The 2013, 14 time frame markets have been wild. There was this crazy unicorn mania that went on, and with huge hefty liquidation preferences, companies were raising huge amounts of funding at what they call unicorn valuations. And that is just not a very good way to build companies. And as a result, we are now seeing the correction going on. We're in the beginning of 2017. The correction started in 2016. This year is going to be a lot of corrections. You're going to see a lot of debt by overfunding. So please do not get hung up that being a successful entrepreneur requires that you raise huge amounts of money. That is just not true. And you just heard Sergio describe how, it's basically putting one foot before the other and building fundamental metrics which actually help you build sustainable companies, not overfunding. And this is a roundtable. As I said, we would like you to participate as much as possible. So use the public chat. I will put up the phone call, dial-in number as well. You can dial in and converse as much as you would like to. We're going to start today with Gaurav Mittal from Kharar, India. Now, Gaurav, first and foremost, I'm going to express my ignorance. Where is Kharar, India?
Hello.
What
Can
part
you
of
hear me?
India is that?
I am on mute. I am
Go
on
ahead.
mute.
Why are you on mute?
Hello,
You're not
can
on
you hear
mute.
me?
We can hear you.
Oh, all right, all right. So Kharar is in the state of Punjab in India. It's near to a city of Chandigarh. Yeah.
Fantastic.
So it's a very small township of around 20,000 people.
Okay, so this absolutely thrills me. Every time I encounter a story like this, it just absolutely thrills me to bits that people from such, remote places are accessing this program. So you just made my day. So keep going.
Thank you. So to set things in perspective, Sramana, this would be more of an idea stage, right? We are at an idea stage.
That's fine.
I just want to bounce my idea on you before proceeding, because I have been trying few businesses, and unfortunately I have been unsuccessful in most of them. So I thought that I'll use this forum to bounce back this idea and then perhaps take the private roundtables going forward. So can we go to the next slide?
Yeah.
So essentially, we are looking at a model which is assisted e-commerce model. We know that e-commerce in India is pretty new. It has been in inception for the past 7-8 years, and only 2 to 3% of Indian population is using e-commerce, right? And majorly they are in tier 1 cities, in metros, and the penetration is going into tier 2 villages, tier 2 cities, but then it has not been penetrated hugely into all these tier 2 and tier 3 cities, and villages are far ahead from the penetration of these e-commerce players. So we look at the problem of these spaces. We see that there is lack of availability of branded products and variety of products in these places. Then there is people are unable to take advantage of the discounts or the price arbitrage which these e-commerce players provide to the metro people, right? And then there is transparency of pricing in rural markets and in tier 2 markets. And fourthly, there is lack of service, right? Lack of service in general is very poor in India, but then when we talk about tier 2 and tier 3 cities, they are all the more poor. So these are the problems which we saw that existing markets have, right? Similarly, we saw that the problems which e-commerce players like Flipkart and Amazon are facing. So there is a lack of growth. So as forecasted, they are unable to actually double their growth in whatever time required, and they have plateaued almost their growth because their consumer base is almost fixed, and average revenue per user is very poor in India, right? Then the issue is they cannot deliver in villages or in tier 2 cities or in tier 3 cities in particular because of infrastructural issues. And then the third problem is slow lack of adoption of technology. So we thought that if these are the issues, can there be a brick and mortar kind of assisted e-commerce play which can be done in these cities, particularly through the retail space, and through maybe the money lender network. If you know about Indian markets, there are mandi towns, right? Mandis are small places where farmers used to come in and put in their agricultural produce, right? And then there is a network of aartis, right? So my father is into that business, and actually we get a walk-ins of around 100 people per day, 100 villagers, and particularly farmers per day. So I talked to them, and I found that there are these problems. So can we go to the next slide, please?
I love it. I absolutely love it. What you're pointing out is something that has been addressed elsewhere, and I'll give you some pointers to study, but keep going. Why don't you keep going first?
So we call this solution as Apni Dukaan, right? Because it would be more colloquial, it would be more near to the people. So there is their Dukaan, they can order from Amazon, from Flipkart, from P.A.I.N, from even they can look for the products which is not in their mind space. For example, financial products. Most of them don't understand the importance of a health insurance, right? As you know, that penetration of health insurance is less than 20% in India. So we thought that since there is already a walk-ins of these farmers in these mandis and these aartis, why can't we open kiosks there, right? And we then can act as using these distributors and network of money lenders and other aggregator centers. So in Punjab in particular, government has opened these Suvidha centers. A Suvidha center is essentially a center where a person would get his Aadhaar card or his passport or various other centers. So we can actually go and liaise with government to use these centers to actually propagate the adoption of technology, because as you know that India is also going in under a digital revolution by the name of digitizing India, right? And finally, last point there was missing. So this is still an idea. I have done a study. I have talked to somewhere around 50 farmers in and around my district. I would want to increase my my research base to more villages and more towns. But then I just want to understand that, is this something which sounds viable and which can be doable, first thing, and how should we go about it? So there are 2-3 ways. We can actually establish our own e-commerce play, as in our own warehouses and all that stuff, or we can use the existing e-commerce players, right? So we can take these questions now, if you can.
Yes. So Gaurav, the genre of companies that you should study are the cross-border e-commerce companies that have, actually some of them have been quite successful. There are companies in Russia, in Africa, and so forth that take products from the American market, mostly from the American market, but also from the European market, and bridge all these logistical gaps and the technology gaps and the service gaps and cater to local markets. So Mall for Africa, for instance, is one that you should study, and you'll find the case study on the 1M1M blog. What you're saying is absolutely valid. So what you're going to need to figure out is what is the model that is going to work for your particular audience. And I think your point is very well taken, that these Tier 2, Tier 3 cities and villages are going to remain outside of the focus and purview of the large players for a while. And at least in the short term, there is definitely a window of opportunity where you can build these kinds of secondary plays where you can charge potentially a markup. You can you basically you expose the audience to a certain potentially limited section of the merchandise that is out there, that is relevant to the audience that you're catering to, and get their orders, and then you process all the logistics of that order, and they maybe pick up or you deliver whatever it is that, however you want to fulfill, and there is an arbitrage in that business. So I think your arbitrage opportunity is well identified. Sergio, what do you think? What is your perspective? I'm sure you see some of this in the emerging markets that you are exposed to as well, no? Sergio, are you on the call? I see him in the panel, but somehow his line is on mute or something. Okay, well, in any case, Gaurav, I suggest that you start looking at the case studies of cross-border e-commerce, including the ones, especially the ones that are on our website, and then
right.
start putting the pieces together, and I'll be happy to help you with moving this forward. It's a good idea, it's a big idea, but you're going to have to again put the how to put one foot before the other. What are the economics of this business? What do you need to do something like this? Does affiliate fees would affiliate fees be enough to sustain the business? We don't know. We have to analyze that. We have to analyze that based on the categories in which you're going to have this business. Like, for example, if you're going to do a village in Punjab, those villagers are probably not going to be interested in the high fashion merchandise that the Delhi consumer is buying.
Right,
so you're going to need to identify what is the portfolio of products and merchandise that your audience is likely to be interested in. What are the affiliate commissions on those merchandise? Is affiliate the right model, or do you want to do it with a markup? There are many ways of playing this business, so we're going to have to work all that out.
All right. So you are right that there are many ways and there could be many business models. And honestly speaking, the first problem which I am facing here is to put in first step, right? How to create that MVP, if I can say that, or a pilot, if I can say that, because I think that I should begin with one small town or one small city, right?
Absolutely, absolutely. So hang on for a moment. Let's finish the other two presentations, and then we will show you how to use 1 million by 1 million to, put one foot before the other. And after that, you can ask more questions on how to, go about it, if you like.
All right. So thank you, Sramana. I think the validation from your side is quite, it makes a lot of sense and gives me a lot of confidence. And I would look forward to your guidance in future as well.
Fantastic. I look forward to it. Girish Jha, East Brunswick, New Jersey. Would you please unmute your line, Girish?
Yes. Do you hear me?
Yes, we can hear you fine.
Oh, I really appreciate giving me an opportunity to talk to you, Sramana.
My pleasure.
Let me start with 3 points first. I came to the United States in 2007, and it was an accident, or you can say an opportunity. One person was listening to my presentation in Delhi, and he told me that he wanted in the USA. And he put up all my resume and placed it to the immigration office. I got an extraordinary visa within 2 weeks. Because of my activities and the works and the research and education and training. That is the first point. Second point, that I was totally possessed by understanding the teachings of the Upanishads, applied mindfulness, and applying them in the area of the stress management, taking care of the physical pain. And after 10 years of initial working, I realized that it really works, because I have master's in psychology doing scientific research, so I was trying to complement. And in that process, I started streamlining scientifically, logically, all these programs and practices. During the last 8 years in States, immigration doesn't pay you the money. I came here and I started working with a lot of people suffering from anxiety, depression, physical pain, PTSD, and a host of other problems, ranging from 5 years old to 70 years old. And it brought me a success. From person to person, I started getting my recognition. So recently, just 4 years back, I met with one Harvard professor who said, no, you have to put in something. So I created an acronym, P.A.I.N, that includes all kinds of problems and challenges, whether it is a professional or a social level or personal level. P stands for pressure, any kind of a pressure. A stands for anxiety, I stands for fear and intimidation, and that creates a negative thinker and a negative personality. So I have been delivering these programs, which is self-designed, delivered, highly customized. For example, a high school teacher comes to me who had a host of problems. So I given a single piece of practices, maybe for 10 to 15 minutes, and every week she comes. Based on the subjective experiences, I recustomize the program, record it, give to her. She does the practices, comes back again next week to see the changes. If the changes are not there, I give them another practice. So it's a kind of a self-assessment based one plus follow-up and feedback. So this is the kind of program. So I think I should go to the next slide. Yeah, customer acquisition. The word of mouth is 50%. To give you an example, she told me that I can tell her name. She's Ann Hoffman, Holocaust survivor. She got totally, as per her saying, that she got total freedom from that depression and the trauma. And she became my volunteer in promoting my programs in the Princeton area. Yes, I give program in person, online, and in groups. Recently, one of my partners in San Francisco gave me an idea, why don't we partner, and started with mobile application. He's a wonderful guy. He created a mobile application, giving my 44 practices that range from 6 minutes to 10 minutes, catering to all kinds of people. But still, I lack marketing. I'm not a marketing guy, to be very clear. So the question comes, yes, this is another. So in India, teaching there for more than 26 years, working there in the federal government, and I was a team member in DRDO. A couple of feathers in my cap. I worked for United Nations Drug Prevention Program in Manipur, where I helped 123 young prisoners who were suffering from substance abuse and HIV as a pilot project. And International Health Exchange Program, I went to Mongolia to teach the medical doctors what you can deliver.
So Girish, in the interest of time, let me start kind of giving you a little bit of direction that would help you start to peel this onion, so to speak. You have some level of validation. You're saying you have 500 private clients in the U.S. and they're paying $1,000 to $1,500 for 10-hour engagements, so to speak, or $500 for group sessions.
Yeah.
So, and you have been able to generate a certain amount of revenue through this process. So, can you analyze these 500 private clients and the 5,000 group clients to try to understand who these people are? At a fairly, you need to parameterize these people. What kind of people are they? What are the characteristics of these people? Because if we want to market anything, we have to understand where are you getting the core traction right now, and then we need to find channels and techniques and strategies of how to expand that into a broader set of similar people. So this is, by the way, called segmentation. You're going to need to understand the segmentation of your clients. You're going to need to understand the segmentation of your clients. What's happening? So once you understand the segmentation of who these people are, there are many different ways of marketing to them. Facebook is one of them. There are, all sorts of different online marketing strategies that you could be following. the reason I'm zeroing in on these private clients and the group clients is that's where your revenue is coming from. I imagine the app that you talked about is not really generating revenues as such. So that's probably a free app that is being downloaded and tinkered with, but it's not generating revenues. And in our philosophy, we kind of believe in companies and businesses and strategies that get you to revenue as quickly as possible. So that's my first feedback. For me to be able to throw any further light on it, we need to look at your clientele and the current traction segments to analyze that and get an understanding of who they are, and then we can figure out how to get more of those.
Yeah, one thing I just want to add that you give me any kind of a client, especially they come from suffering from some problem, whether it's a personal, professional, or social challenge. And it ranges from 12 years to 70 years. So it was becoming a challenge for me to segment, to create a kind of a segmentation of this market and get more private clients to generate a revenue. And I have seen the people like Headspace. There I can easily fit in, and I can create a lot of programs and audio digital files to help people. And I have seen another website is the eMindful. They are doing great. And I think you might be aware of the Headspace also.
Girish, you can't be everything to everyone. You cannot scale a service by catering to 12-year-olds to 70-year-olds. You're going to have to pick a niche. You have to pick, and you can't do professional, personal, marriage, counseling, everything. You have to pick a positioning, and you have to decide where is your core competency and where do you want to position your service and seek clients in those areas.
Right. So can I do the segmentation based on the challenges that they face, so it covers all the?
Absolutely. I mean, one very obvious one to me is that you could go after divorced people.
Oh, okay.
Divorce is a very big segment, and you could.
Yeah, that's really a good idea. I appreciate it. Yes. And
whatever you choose, you need to choose age bracket. You need to choose specific problem category, and you need to position your product. And then accordingly, you need to derive the marketing strategies that are appropriate for that particular segment. And I'll be happy to help you further with that. Why don't you hang on? Again, I will explain to you how to use 1M. I have one more entrepreneur that I need to work with. But you have validation. You have. I don't see why you cannot scale this business quite a bit.
Thank you, Sramana. Thank you very much.
You're very welcome. Vipula Tailor, you're up next. Please unmute your line and talk about what you're doing with Azure 8.
Sorry. Hi, Sramana. This is Vipula here. Thanks for giving me this opportunity to talk to you today.
Sure.
Azure 8 is a portfolio of companies, and this is a little bit of atypical of a startup company, which you see in Boston area from the biotech side. And the reason I'm saying that is we actually have 3 verticals, and we have products in all the 3 verticals. But today I just want to pitch to you about the transdermal technology platform that we have and the growing market in this space because of a lot of side effects that you see from the oral and injectable drugs that you take. So let me jump on to slide number 4, if that's okay with you. Yeah, so we have a company that actually has products starting from phase 1 all the way to commercial products. And the transdermal technology has been looked at for many years. However, what we've been able to do is really bring multiple transdermal technologies into our platform and be able to drive some of the drugs that were not able to be delivered transdermally. And when I say transdermally, we are looking at a very simple patch technology that you can just put like a Band-Aid patch on your skin and have the delivery of the drugs. So let's go to slide number 6. So current estimated market for this transdermal drugs are going to be about $81 billion by 2024, and last year's market revenues were about $31.6 billion, and half of that is actually coming from North America, which is very, very attractive for us to, look at this space. And really the market growth is coming from, sorry, could you go back to the slide number 6 again, just quickly. So the market growth is really coming from the pull from the patients and the providers. They really are looking for a safe way of delivering the drugs, and the most important aspect of this is as the baby boomers are growing older, there are multiple drugs that they have to take, and it's really becoming very, very difficult to administer all those drugs together to these patients. Let's go to slide number 7. So the way our technology has been able to differentiate itself, again, we have a proprietary and patented technology. We've been able to integrate multiple transdermal technologies. There are about like 9 different ways you can actually do transdermal drug deliveries, and we've been able to use as and when we need it based on the molecule that you're trying to deliver to the body. And then the main important part of this is reducing the side effects, because it actually omits the GI tract, which is a gastrointestinal tract. It doesn't really have the same loading in your liver, therefore it has a very, very little side effects. So that's another, very interesting point, which I think over the time has been recognized in the industry as well. So let's go to slide number, I'm jumping here because I do have too many slides here. I apologize for that. Let's go to slide number 10. So we are
what is the name of the slide? Because I don't see your slides don't have numbers.
Oh, I'm sorry. Yeah, that's the right slide, Sramana, the POC, transdermal drug delivery opportunities. That's the right slide. So this, because the transdermal can be applied to a lot of areas, we want to be focused in few areas. And the areas that we have chosen is diabetes, which is obviously a huge market. We're looking at follicle stimulating hormones for infertility treatment for women, because these injections, when a woman takes, they are very, very painful, and has a huge opportunity there. And the other one is pretty much anti-nausea type of transdermal patch, which is not only for travel sickness, but also for patients who go through chemotherapy and they cannot really keep anything down in their stomach, and that's where it's important. The last bit that I've highlighted on the slide is the defense abuse deterrent transdermal system. This, we have just got a patent on this, and all our drugs and all our patches will actually have the system embedded in it, so that people cannot use these patches for any kind of abuse. And let's go to slide number, I'll jump into transdermal abuse, which is going to be, I'm sorry, I'm just looking through my slides here. Yeah, we can stay with, so let's go to diabetes. So diabetes market is huge, and we have been able to now even deliver insulin through the patches without having complicated pump system. So that really helps, again, to the patients.
So, Vipula, I don't understand your business. What is your business? We know diabetes is a big market, and some of these markets that you're talking about are big markets. Point taken. What is your business? What do you do?
So we actually developed the patch with all these medicines which are already approved by FDA into the patch, which will actually allow the patients to not use injections anymore and eliminate oral route of administration.
Okay.
So it's a different type of delivery system. And the reason for that is you cannot combine multiple drugs. So for example, if you're a diabetic patient, you are on at least 4 types of medications, and you have to take either pills or injections in a combination. We can actually build one single patch and deliver all of those 4. And the big problem with these patients is compliance. Because they have to take so many medications and injections, they kind of like try to miss 1 or 2 injections, and they kind of like fall into this so-called risk mode, where they are either very, very hyperglycemic and they have to go into an emergency clinic. So what our patch will allow you to do is our patch will deliver the medicines for 5 to 7 days. And if you go back to slide number 13, it will show you that we have We have a 15-minute delivery system all the way to 7 days or 5 days delivery system based on what the patient is needed. And so we actually have a very good profile for the pharmacokinetics of the drug, and therefore the patient will have 100% compliance. And that 100% compliance will result into best outcomes for the health for those patients. So this is really transforming the mindset around and transforming the whole paradigm shift from, taking the drugs by injections or oral, and then bringing it into transdermal where patients really don't have to think about it. And if you think of Alzheimer's patients who cannot even remember their name, they really forget how to take their medications. And these are really geared to the patients, like children who don't want to take the injections, patients who have some kind of cognitive dysfunction, women who are unable to take anything orally or in terms of side effects when they have to take it injections. So all of those have been eliminated, and we actually are working right now with, say, hepatitis C company here in Boston, where we actually formulating their drug into a patch, so that what happens with hepatitis is very critical. Is if you miss one single dose, you basically become viral resistant, so that treatment will not work for the hepatitis patient again ever. So the compliance is a huge thing here.
What is the issue here is, it seems to me that there's no ambiguity that this would be tremendously helpful. People who are taking, 5, 6, 10 different drugs, combining them into one, patch would be tremendously helpful and tremendously convenient. But you have to get some. What is the clinical approval process for something like this? Is it like every single permutation and combination needs to go through a clinical trial?
It has a very reduced clinical trial phase. So we actually had discussions with the FDA. You get a 505(b)(2) approval, which is basically you actually take an approved drug which is already in the marketplace, put it into the patch formulation, and you can actually do a phase 2 trial, which is basically, if you look at the chart that I have on slide number 17 for the follicle stimulating hormones, that's exactly what FDA needs. It's an in vitro data, and then you basically show the efficacy for the dosing, because you'll have to match the dosing of an injection or oral drug in your patch. So it's a very short route, about 12 months to get approval versus about 4 or 5 years when you actually reformulate and repurpose the same drug. And also
which tells me from a strategy point of view, your presentation jumps all over the place. If the clinical trial process is so cumbersome, then I would just choose one set of permutations of, like, these are the different drugs that are required for certain types of patients, whether it's diabetes or infertility or whichever one that you choose, pick one and get that developed and cleared and so forth. If you try to do this many things, it seems to me that it's going to be a nightmare to manage.
No, we're not trying to do all this. Sorry, I may not have been clear, but what we're doing is we're working with different pharma companies right now to take their drugs that are actually going to have maybe 3 years left in the life patent, so that we can actually put into the transdermal patch and actually get approved within the 12 months before the expiration of the patent, and get an extension of 3 to 7 years of their life of the patent for those drugs. And some of these markets where the pharmaceutical companies have been as injections or oral, they have not been able to maximize the market because there are lots of patients, almost like 25 to 30% of patients, they cannot take these oral drugs and injections for their health reasons. And so they can actually even capture that 25 to 30% of the market share that they haven't been able to do that with their current products. So the drug approval process is very straightforward. It's basically showing them an in vitro data, which is kind of like a 3-month study, and then basically able to matching the dosage, which is currently either in oral or injection form, into a transdermal form that will have the same efficacy level.
And are these pharmaceutical companies going to be the ones who are going to be selling these patches, or are you going to be selling the patches?
No, we actually, if you look at my slide number 24, it actually shows you that we actually have 3-tier collaboration approach for the return on investment. One is either we actually have licensing deals with these companies for certain territories and for certain products. Second one is we actually develop the products for them as an R&D collaboration. And then third one will be to access, give them access to our technology, to use it for their compound. So because this is a plug-and-play type of technology, and then the thing is, all this time, transdermal has been there in the space since 1980s. The problem is you cannot deliver more than 400 kilodalton size of the molecules. And if you look at most of the recent drugs that come out, they're all biologics, and we can actually do a gene therapy through the transdermal technology as well as all the biologics, which are higher than 400 kilodalton molecule size. So we actually are very uniquely positioned to support every new drug that comes out to be delivered transdermally. That's the proposition. I'm sorry, I can't hear you. I think I lost you here. I can't hear you, sorry.
Can you hear me?
Yeah, I can hear you now.
Okay, so my read of this, what you're presenting here, and I will caveat that by saying that biotech is not our area at all. So
okay,
you can throw away my feedback in the trash can if you like. So I'll just give you my common sense feedback is that to me it seems like it's drug marketing is a very expensive affair. So if you are finding some angle with which to collaborate with pharmaceutical companies and create the, maybe you have your intellectual properties in developing these multi-drug, multi-compound patches, and if you license that technology to them such that they create these patches and license these patches and sell these patches, not license, they market these patches, you are in a better position to go to market, and in that case, the right investors should be those pharmaceutical companies. But I honestly don't know that much about drug discovery or drug marketing, so I can't say that I stand firmly behind. To the extent that I can stand behind technology, IT, information technology companies, I cannot say that about biotech. So I just gave you my common sense gut feeling.
No, thank you so much. I appreciate your feedback. Again, this is something that most of the drug companies have struggled over the years just because they could not really figure out how to do the transdermal technology. And very honestly, I think they would like to have this for all of their drugs, but the problem is you have to have a reformulation time period, and when they're in a rush to be first in the marketplace, it's really difficult. But I think for us, we are coming as like in cancer, you have the primary treatment, then you have a secondary treatment, and both are needed for the patient to get better. So our secondary treatment is a transdermal patch, which actually allows them to bring the extra market and also to help them to drive these products into patients that they would not be able to take otherwise. And
all right, thank you, Vipula, for your presentation. We need to move on.
Okay.
Folks,
thank you.
If you like what we're doing here at 1 million by 1 million, one of my requests is spread the word. We are looking to work with serious entrepreneurs, people who understand that you have to put one foot before the other, build validation, build fundamental metrics, and so forth, and not blindly running after funding. All our resources are at 1mby1m.com. You'll have a blog, which I already referred, Gaurav, I think, to some case studies. The blog is chock full of learning material. So if you follow the blog, you'll dig around in the blog, you'll learn a lot there. And the Entrepreneur Journeys book series is actually based on some of that blog content, and we've published 12 volumes of Entrepreneur Journeys case studies-based books. These are all on Amazon, and they double-click down on specific topics. That will also be something that you can very easily and inexpensively access as a learning material. These roundtables, the one that you're attending right now, they happen every week, every Thursday morning. We are on our 341st session, so extensive offering. We have one every week going forward. We have the full acceleration program, which is our 1M1M premium program, where you get extensive methodology guidance, step-by-step guidance, both from a methodology point of view, as well as we have private roundtables where you get project-based guidance, so that's specific to your project and you, what is your next step to, both strategic level as well as tactical, just like block and tackle of how you survive in the market, how you get to the next level. We do help you with business development. We have a fantastic curriculum to give you that methodology training that has been developed in collaboration with 750 plus successful entrepreneurs. And you met Sergio today. Every week we try to have somebody from that network to come and talk to you here as well, so you can learn from them and their insights also. And then all their case studies are built into this curriculum. So you will learn a lot from essentially meeting these people within the program. So the strategy consulting happens at the private roundtables. We also help you with financing, with the caveat that less than 1% of companies who seek financing actually get funded. So most companies are not fundable. The ones that do get to fundability, we can help you with financing. And in that process, if you do have a concept that is a financeable concept, we can also help you, align the ducks so that you can go have a successful funding discussion. And then there's all sorts of negotiation-related issues. When you do have a term sheet in your hands, how do you negotiate that term sheet, and what are the issues that you need to look for? One thing we are seeing, especially in the emerging markets, is very onerous terms. Investors take 50% in a seed round of the company, and that kind of terms makes the company unfinanceable in the follow-on rounds. So you really have to be very careful about how you're funding your company. Otherwise, you kind of put yourself in this twilight zone where your cap table doesn't allow you to raise any more money. Startup, entrepreneurship, essentially the early stage entrepreneurship for a first-time entrepreneur is a gigantic learning curve. So please try to navigate that path with some expertise around you, where you can get people to mentor you through these very complex issues. Don't shoot from the hip is my point. And then the last thing we do in the premium program is we have a tremendous clout in the media. So we can get the word out about your company very extensively. And that's valuable because you're trying to market essentially. So getting the word out about your product or your service out there is very valuable. Now, I recommend all of you go to the 1M1M self-assessment questionnaire. It's free. It's on the website. Ask yourself these questions. These are the key strategic questions that every entrepreneur needs to answer. If you get stuck on methodology issues, you can go do 1M1M Basic, which is a curriculum-only option, and you can learn methodology there. It's only $99 per month. If you just stay 1 month in that program and really intensely study, let's say 60, 100 hours in a month, you will be able to get a lot further just with that. So these are very inexpensive ways of bridging your knowledge gaps. And then just dig around on the website and see, if you want to do the premium or the basic or what part of the program. There are lots of FAQs. Figure it out if this program is the right program for you. This is not the right program for everybody. We don't do a lot of spoon feeding. So it is a self-learning program. So you have to do a lot of curriculum-based learning in an online self-learning mode, and then come discuss your projects at the private roundtables where we do the actual strategic planning and strategic consulting of your businesses. So that's the delivery mode of this program. So if you're not comfortable with that delivery mode, you would not be able to get as much out of this program. If you expect that somebody's going to sit there and spoon feed you, that's just not what we do. And then it's a case study-based program. You're getting to learn from a lot of entrepreneurs like Sergio and like another 750 other successful entrepreneurs whose case studies, whose journeys, whose advice is built into this curriculum and this program's methodology, and you get the opportunity to basically stand on other people's shoulders. Our methodology is lean, capital-efficient, bootstrap startups. At no point do we assume or advise you to pursue capital-intensive strategies, and we just don't believe in capital-intensive strategies, especially not in the early stages. So that's pretty much it. All of March, we have Thursday roundtables, so if you want to come and discuss your business, please reserve a slot on the website, and we will work together on your business. The line is now open for call-ins. If you'd like to call in, please just let us know in public chat that you're calling in so that I know to call for you. And while you are getting ready to, by the way, you can use the public chat to ask your questions as well. While you're doing that, let me introduce you to Irina Patterson, who's on our team and who will answer your questions about the program. If you have after this session, if you have questions about the 1M1M program, Irina would be your contact point. Irina at 1mby1m.com. So questions, folks, anybody? Questions for public chat, questions by calling in. Anybody? No? No questions. Vipula, go ahead. Vikram Pottar is asking, does the platform enable ideas or a solid groundwork framework to be deemed investable? Ideas are not fundable. However, as far as the 1M1M program is concerned, we are able to take ideas and turn them into fundable businesses. So you can start with the program with an idea and start putting one foot before the other, and we will help you get to a fundable state if your idea does have those legs to do that. And all the methodology of doing that is built into the program. We do that routinely. We prefer actually that you come as early as possible into the program and don't futz around and run out of runway, essentially. So as far as we are concerned, we can work with as early stage ideas as necessary. At the same time, we also work with companies that also already have quite a bit of revenue and are looking to get to the next level. Vipula Tailor is asking, are you more focused on IT and not pharma? We are only focused on IT. We don't do pharma at all. It's not a question of more focused. We only do information technology. Gaurav Mittal, how many private roundtables do you have? We have at least one a week and sometimes more. Gaurav Mittal, you want to call in and ask a few questions about the program? Go ahead. Vipula Tailor, do you have support for iHealthcare or digital healthcare? Yes, it's called healthcare IT in our world, and we do have that in the program. Yes. Anybody else? Vikram, did I answer your question? Do you have any other follow-up question? Where are you dialing from, by the way, Vikram? Mumbai. Okay, great. And how did you find out about 1M1M? LinkedIn, all right. Darren Reed, are you in the room? I know you're using the basic program. Could you give us an update on what you're working on and how is it going? How are you progressing? You're a current undergrad engineering student. Excellent. We love student entrepreneurs. We know we have a lot of case studies of student and entrepreneurs, especially people who are engineering students who start, bootstrapping a venture while finishing up their curriculum and then build very interesting companies from there on. So keep learning is my word to you. Anybody else? Updates? All right, folks. we are almost at the end of the show today. We will meet you back here next week and continue working. Remember, this is a working session. It's a safe working session. Anybody who needs help, please come and we will do our best to help you along.
Hello.
Did somebody call in?
Yeah, hi, this is Gaurav.
Gaurav, go ahead.
Yeah, so I just want to understand that would you help me in understanding the technology, because at this point of time I don't have any co-founders and all that stuff. So is the program also aligned towards how to get the co-founders, how to build the team and all that things which generally a startup founder face?
Yes, we will advise you on that. Be aware that if your choices are limited, you have two choices. One, either you have to find a technical co-founder or you're going to have to outsource your development. Those are the two choices.
All right.
And there are lots of, underneath those two choices, there is all sorts of methodology, all sorts of, wisdom and technique that you're going to need to learn. But those are the two high-level choices that you're going to have to work with.
Mm-hmm. And so as I understand, it is more of an implementation-based methodology, right? Where you would guide us about how to go ahead about implementing it. But then, if in the interim we find that the idea itself is maybe too early for the market or flawed, then do you work for again looking at a new idea in the similar market or something like that?
So the first module that we're going to put you through in the methodology is validation. So you are going to have to do very deep validation of your idea, and in that process, many ideas get invalidated. So we have had companies or entrepreneurs in the program who start with one idea and end up with in a very different place. They invalidate one idea, maybe even two ideas, and then come up with a third idea that has legs. And that's all fine.
All right. As you pointed out during my presentation, that it seems to be a big opportunity. And I think in the last leg of your presentation, you also said that you help a fundable opportunity meet those right investors, right? It
yes.
is included in the module as well. All right.
Absolutely. That's all included. You have to be aware of the fact is that just a big idea is not necessarily fundable. There's timing issues, there are growth, pace of growth issues. All those need to be factored into, building something that is fundable.
Yeah, I do understand that, and I am pretty sure that there will be implementation challenges now and then, right? So I'm up for that.
But all that is part of the program. All the entire fundability assessment from diagnostic to building to fundability, all of that, and then introducing to investors, negotiating deals, all that is part of the premium program at the same price with no extra charge.
All right. Thank you.
Okay, I have a couple of private messages from David Kamwana. Folks, don't send me private messages. I'm just going to read out David's messages. David says, I'm certainly interested in what you have to offer. The development of our website is almost complete, about 3 months out. At that point, I'll come on board with your program. I've watched all your videos on YouTube already. That's very good that you've watched the videos and on YouTube and you're definitely learning as you're going along. But I would suggest this one thing, that don't wait. The longer you wait, the longer time you're wasting in not building the right go-to-market strategy. You're developing your website. Why can't you do strategy in parallel? And the other thing that we see is that very often, as you're doing the strategy, you often have to change course in your development. So you wait 3 months to get the feedback and get the strategic insights, and then you may find that you're going to need to make changes. So why not get that strategic insight early? The biggest problems we have is when people come to us too late, and we can't really help them anymore. They've run out of all the runway, they've made all the mistakes, and it's too late to course correct because they have run out of A, energy, and 2, resources to move forward. And there's no runway to course correct. So don't wait till the last minute to come to the program. You know, we don't have silver bullets. Like, I'm not Harry Potter that I have a magic wand and I can fix all the problems. This is you know, you're going to have to strategize. I can help you with strategy. You're going to have to execute. And that's how we build businesses. So it's a very pragmatic, hands-on program, and there is no silver bullet. There's no magic wand that I have access to. Vikram Poddar is asking, do you connect fellow entrepreneurs on the platform? Every single roundtable, just like this one, you meet your fellow entrepreneurs. It's up to you whom you want to connect with, and you're most welcome to connect with anybody that you'd like to connect with, and people do extensive networking, peer networking within the program. Vikram Poddar is asking, and how important is market validation before starting out? Market validation is, as I said, the first module in the methodology that you're going to be working on. That is the most important piece that you're going to start with. It's not before starting out, that's what we start with. Anybody else? Questions, comments? No? All right, folks, then let's get together next week and continue the conversation and continue working on your businesses. I tremendously enjoyed today's session and you know, the global nature of it. And especially, Gaurav, you really made my day. You know, the fact that you found the program and you've connected with the program from an unlikely place really gives me great pleasure and great satisfaction that we are doing something right. Thank you for coming, everybody. Bye-bye. Take care.